See you back next week. Dinshaw Irani is joining us, Chief Investment Officer at Helios Capital India. Dinshaw, good to have you with us here. Thank you very much for your time. You know, just start with just a quick view on the market itself, Dinshaw. We had, we spoke with Samir on the day before yesterday, basically, when we hit that 19,000. He's not a big fan of all-time highs. He says, well, returns should be in the range of what we are used to over the last decade and a half or so. So eventually it'll roundabout be the same. Just your thoughts. How are you dealing with markets at a portfolio level? What have you been doing?
So thank you, Prashant, for having me on your show, and a very good afternoon to you and your viewers. So Prashant, the fact is that when you develop a portfolio, you obviously look at a big chunk being for the stability part and another chunk which gives you the real alpha as such. So that's how we mix and match. What we try to do, however, when we're building the portfolio is that make sure that our peg is at a very reasonable level, like less than 1 basically. So today it is at 0.6 or 0.7, despite the run-up in the market. So that way we are very comfortable here. And obviously the big chunk which is pulling the peg down for us is financials. And we continue to be fairly gung-ho on the financials because, as we said earlier also, that financials partake in this whole consumption boom by not only funding the consumption, but also funding the capex for that consumption itself. Having talked about that, about the construction of the portfolio, about the market per se, the good part about the market at these all-time highs is that it still hasn't hit. The valuations are still reasonable. If you look at the last 6 or 7 years, when things have really changed in India, I'm basically talking about the years after demon as such, when money started flowing into equity markets, mutual funds, and so on and so forth. So after that, if you look at the valuations, we're somewhere there. Slightly more expensive, probably 5-6% more expensive than what the average valuations have been during that time period. So that gives us that comfort that we are not in a zone which is flashing red lights or such. I don't think it's amber also right now.
Dinshaw, afternoon, Reema here. Every year, it's either the IT or it's the banking sector which has driven the big alpha for the Indian markets. Last year, it was banks which outperformed the IT index by 47%. But the year before that, calendar year 21, calendar year 20, it was the IT index which outperformed banks by nearly 50%. And this trend goes on for the last 1 decade at least, the last 10 years, that it's either banks or IT which has generated the big alpha. Now, this year, in the first half of the year, there has hardly been any divergence between the banking and IT. Both of them have, got a middling performance. The Nifty Bank is up 4% year to date, while the Nifty IT index is up 3%. What have you made of that? Is this going to be a, kind of year where everything does well? It's rising tide lifting all boats? Or do you think this divergence, one of the two sectors will outperform?
Well, Reema, our bet is on the banking sector, on the financial sector. Frankly, IT, I think, as we cannot justify the rally that one has seen in the recent days in IT, especially given the fact that the June quarter, which will be announced very shortly, some numbers will be coming out in the next couple of weeks as such, you'll see that most of these IT guys are going to give you a negative sequential growth rate. This purely the worksheets that talk to us. You look at the way they came off the March quarter, which was one of the all-time lows. I think that trend continued into the June quarter, and in fact, things have worsened if you listen to the commentary of the management as such. So we are not that keen. We don't think this is justified today. Whatever is happening in the IT space. So our feel is that it will be the banking space which will pull off. Obviously, there'll be certain other pockets which will contribute, like consumption will be one pocket which will contribute, not the FMCG part though, but obviously the discretionary part, which is already happening in some of the spaces. So that's what our bets are, our big bets are right.
All right. Hi, Dinshaw. Good afternoon. Dinshaw, what's your view on the insurance space? I think you'll have some exposure out there, right? You'll still have?
Not really, Nigel. We're more or less out of that space per se. Even, in fact, during the time of the budget, when the announcement came through, we moved out totally.
Oh, okay.
Dinshaw, hi. So, markets at all-time highs. Tell us, are you doing more of the same, or are you also looking out for any new ideas? Is it still easy to find new ideas in the market given the run-up, or is it getting more difficult?
So, Surabhi, no, actually it's not. The market, that's a good part about our Indian markets. We got enough flavor and more in the market to look for ideas whenever we feel like. So we already working on a few. Actually, what you mentioned made a lot of sense also, because when this markets rallies, I mean, there are certain pockets which become fairly uncomfortable for us. I mean, as in the run-up has been sharp and there's no commensurate run-up in the fundamentals. So there we look at taking some money off the table, but it's more of the time goes into balancing the portfolio today. I mean, as in move out money from some real outperformers. I mean, not move out the whole money, but at least reduce the balance, the weights in some, and then take out that money and put into fresh ideas which are coming by.
And ideas are coming at warp speed, right? There's so much going on, it's difficult to keep track.
Yeah, so they come at warp speed, but we take our time to evaluate our ideas. Yeah.
Well, there's no time to take. That's the problem. Because if you take time, it's too late. But how do you? As an institutional investor, you don't have to jump at everything as a fund. Which private investors can do. But what are you doing? How are you? Which are the new themes that you were talking about? Anything looking interesting? From here on.
So basically, we are now started evaluating on the infra space as such. I think that's one space which will do fairly well going forward as such. So we trying to find our ideas there, maybe look at some niche players and work that way. Obviously, outsourcing has been one big theme for us long, and we've been trying to play that too also. And then we remain with our two old themes of financials and consumption. That's how we're working it out.
Infra, could you give us a little more color? Where exactly in infra? I mean,
so basically, sure. Basically, any stock related to the capex cost. Our feel is that there have been 3 cycles which have got postponed on the private capex front. I mean, started with the elections of 14, where things got postponed. Then came demon, things got postponed, and again COVID, which postponed the infra push as such, probably the capex push from the private sector. So our belief is that anyone catering to that space should see a huge lump up of demand coming through in the next few years as such, because that's the space which is going to pick up. So that's what we are focusing on.
So size no bar, or you'd stick with the large ones, L&T and those, yeah.
Yeah, so that's an easier one to call out, right? I mean, L&T is on obvious bet for because he's in most of the industries. But obviously, there's no size bar for us, so we're looking for some more ideas within which people have identified. So
we had Mihir Vora of Max Life in the morning with us, who was making a similar kind of point that he likes. I mean, companies and contractors is one specific segment within infrastructure that he was talking about.
No. We're not too keen on that space per se. No. Because when you deal with government entities, there are lots of slips between the cup and the lip. So that's why it's important.
Okay, got it. Well, different strokes for different folks, as they say, right? Thanks very much, Dinshaw. Appreciate you joining in, and thanks for taking out the time and being with us here. As always, have a good weekend. We'll see you back soon. Well, we'll take a quick commercial break here with news that I think the